Hello, Kurt Jackson with KJ Financial here again. We're in the second module of our Retirement Accelerator Blueprint, where we're discussing the 10 biggest risks of retirement. We're on risk number 8, and that is long-term care risk. So did you know studies have shown that if you make it to age 65, you have almost a 7 in 10 chance you're going to require some form of long-term care. Now, keep in mind, long-term care or specialized care, whichever you want to call it, includes in-home care, assisted living, nursing care, and memory care. Is where and how you're receiving care you may need, where you may need it, is it something that you want to have control over? Or are you okay leaving your care up to someone else, like Uncle Sam? So costs for long-term care can vary. So Genworth's cost of care study shows back in 2021, hourly home health aid were $27 an hour. That's up 12.5% from 2020. Assisted living is $4,500 a month. That's up 4.65% from 2020. Nursing home semi-private room, so you had to share a room, is $7,800 a month. It's up 1.96% from 2020. And nursing home private room is $8,910 a month. It's up 2.41% from 2020. So for those who don't have a plan for these costs, it can cause a huge drain on your retirement resources. So the high percentage of COVID deaths in nursing homes has moved the needle on who controls where and how we receive our care. So there are ways to plan for long-term care that are costly, having ever-increasing premiums, and if you don't use it, you lose all the premiums that you paid into it. There are ways where you can put some of your retirement assets up to help cover some, if not all, the costs. And if you don't use it all, you can still get some money back, or I guess I should say your heirs would get that money back. And there are ways to multiply your money to build up a big bank of money to use to control where and how you get your care. And whatever you don't use passes to your heirs income tax free. So which of those three options would be the most efficient? Isn't it the last one? I mean, has anyone told you one of those living benefits in cash value permanent life insurance is allowing the death benefit in the policy to be used to help pay these long-term care costs if you need them? So think back to when we were mentioning cash value permanent life insurance. Well, living benefits is another on the menu of benefits that cash value permanent life insurance provides. So think about this. Perhaps we shouldn't allow the misinformed or competitors for your money to give you the wrong preconceived notion about some financial products and strategies. Does that make sense? So what would happen to your retirement resources if you needed long-term care? Wouldn't they get depleted somewhat or maybe even completely? So could that mean you would leave less behind to your heirs? So wouldn't you be the hero if you had a plan where money for long-term care was there if you needed it, but if you didn't, your heirs would get whatever you didn't use income tax free? So ultimately, long-term care costs are one of those risks that we don't know if we're going to need or not, but the longer we live, the more likely we'll need it. There's that risk multiplier, longevity risk again. Would it make sense to spend the least amount of your money to provide protection against this risk? And if you don't need it, your heirs not only get back what it cost you, they also get a lot more money passed on to them, income tax free. Doesn't that sound like a great addition to the Retirement Accelerator Blueprint for your retirement? All right, so now you're ready to check out the video on the 9th retirement risk, and that's deflation. So go ahead, click on the video below, and we'll see you there.